Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what are we talk about? Well, since I don't have a lot of new trades on due to the situation in the market, and I was going to talk a little bit about patience, but I think that goes without saying, and I'll highlight that in a few minutes. But I think it's good to take a step back and talk about how markets really work. Whenever the market gets a little iffy, people go into denial. And then I want to reiterate, it's kind of beating a dead horse on some of this stuff, but it's so crucial and so important. I want to beat the dead horse on Landry Light to stay on the right side of the market and do a quick update on the TFM 10% system. And based on some things that have happened lately, I want to really emphasize why technical analysis and especially money management are crucial. And those things sort of dovetail with each other, and that'll make a lot more sense in a few minutes. Housekeeping, do take requests, makes my job a lot easier knowing what I'm going to cover ahead of time. You can reach me at davelandry.com/contact. My Twitter handle, easy for me to say, is right here. If you want the slides from this presentation and all the other presentations combined, go to davelandry.com/StockCharts. A lot of money management setups, etc. there. Also, if you would like to join me on Thursday nights, if there's something you want covered that I can't fit into this slot, I'll cover it on Thursday nights. As I often say, a little bit more open-ended on my Thursday shows, and I can stay until everything gets covered as opposed to a fixed time. Getting back to what I was just saying, the question is, how do markets really work? Yogi Berra once said, if the world were perfect, it wouldn't be. And as far as markets are concerned, my answer to that would be, if the market were perfect, it wouldn't be. If you think about it, everybody would agree on price and there would be no discrepancies, but then there would also not be a market. Now, let me just back into a little psychology and more accurately neurology here, and this is something I've talked about quite a bit. It is impossible to make a decision, and that's any decision, even what you're going to have for lunch, without emotions and stress. And that reasoning comes from Denise Shull and Damasio. I was speaking, probably 11 years ago in San Francisco, and Denise Shull was there, and I really enjoyed her presentation. One thing Denise Shull explained as a reason confirming that you can't make decisions without emotions is that people who have been unfortunate enough to have illness or injury where that part of their brain is damaged, they can no longer make decisions. They can't make any decisions because each decision does not have a consequence. So if a doctor is meeting with them and says, would you like to meet next Tuesday or Thursday, they can go through a list of reasons why they should or should not meet on Tuesday, and then a list on why they should or should not meet on Thursday, but they arrive at a stalemate and the process never ends. They can't make any decisions. So you can't make any decisions, even what you're going to have for lunch, without emotions, stress, and those things that come with dealing with the consequences of your decision. Now, if you think about it, what makes a market? Well, my answer to that is the buying and selling of the participants. Without buying and selling, there would not be a market, right? Well, since all of their decisions are emotionally based, the market is emotional. So the market is emotional. Tom McClellan gave a speech a few years back, and I guess it's more than a few years now, to the American Association of Professional Technical Analysts in New Orleans. And he explained that when you buy a stock, you're forming a relationship between you and the company. But what most people fail to realize is you're also forming a relationship with anybody who bought the stock prior to you. Now, a lot of people are just thinking of your relationship between you and the company, and they expect the company to do good things and try to make as much earnings as possible and be as ethical as possible and so on and so forth. But they fail to realize the people who bought the stock prior to you are of a much bigger concern. And Tom went on to say, and those people will screw you. As I often say, we're trading traders, not markets. I had emailed Tom after the presentation and said, Tom, I've been kind of beating a dead horse, rehashing the points that you covered in your presentation. And he said, Dave, I'll do you one better. As far as quotes, here's another one from my late mother, Marion, regarding market timing. Everyone uses timing in their investing. Some people buy when they have money and sell when they need money, while others use methods that are far more sophisticated. Now, this sort of haunts me all the time. It's like I came in yesterday and I had really good profits on Friday, and I found that I probably over traded with the intraday trades, that is. I haven't taken any new position trades in quite a while because of the market. Really just the database hasn't been producing a lot of setups lately, and the market's been kind of iffy, as you know. And I just haven't seen a lot of shorts with the market being oversold. But anyway, so I came in Monday and I had money. Well, by the end of the day, I had less money. But I did find myself, and I always ask myself when I go to trade, do you have money? Do you need money? Or are you doing something far more sophisticated? So never forget, the actions of the participants might not, and likely often do not, have anything to do with the underlying company. So what makes a market move? Well, if you boil it all down, it's either supply or demand. And if demand is exceeding supply, the market goes up. If supply is exceeding demand, the market goes down. Nothing more, nothing less. I can explain this to people, or I can draw a big blue arrow on the chart going up, as long as it's going up, that is, and nobody has a problem understanding this. In fact, a lot of times they look at me like I pooed my pants. It's like everybody knows that. Markets go up and markets go down. Duh. But when the market starts going down, they begin to reason why it shouldn't be going down, and they fail to believe what is. And last summer, when the market was making new highs, I thought it would be a good time to do a presentation on market timing. And that was, I think, in the middle of last August, if you want to go in and find that. And I thought it was a good time to talk about it, as opposed to waiting until the market sells off hard. And as I said in the presentation, a lot of times, or most of the time I should say, nobody asks me about the market when it's going up. They wait until they're down 30 or 40%, and then all of a sudden they call me in a panic. Well, by that time, the bomb's already blown up, so it's too late. Linda Rasky, and I asked her where she got it from, and she's very modest, and she says, oh, that's I just probably picked that up on the floor. It's a florism. But she once said, the market will do what it has to do to frustrate the most amount of people. And a corollary to that is the market will often do the most obvious thing in the most unobvious manner. So what does that mean? Well, if we take a look at this last little slide we had, and then we had this big retrace rally. And if you could stand it, go in and watch all the market in the minutes over that period of time. You can go to my YouTube channel, youtube.com/C as in Charlie /Dave Landry. And then I would also recommend you take a look at my trading service archives, davelandry.com/archives, and weekend charts and all the other presentations that I've done since then. And you'll see that I've said over and over again, my big concern was that this market would rally just enough to make everyone feel pretty good and feel like they've dodged a bullet and then roll over. And I am kind of a man on the street kind of guy, and I was listening to what my friends were saying, and right around here they were all feeling like, hey, it looks like everything's going to be okay. And I'm like, I don't know. Now, a while back I had a TFM 10% sell signal, and I told one of my buddies, I said, look, one of my systems I follow just triggered a sell signal. You might want to talk to your guy. He's got a guy that takes care of his money. And he said, I did, ! And I'm like, well, what did he say? He said that we are getting more aggressive. And I'm thinking to myself, as we say in Fargo, oh, geez. Now, I have a problem of wearing my emotions on my sleeve, so I'm pretty sure I rolled my eyes. And he got a little defensive with me. He's like, hey, my guy has made me a lot of money. So without thinking too much, I kind of snapped back and I said, your guy hasn't made you a lot of money. The market has made you a lot of money. And the reason I said that is knowing that his guy is a buy and hold guy, and I'm taking a chance on that. There's a 99.99% chance that he is, because they all tend to drink the same Kool-Aid. The market goes up longer term, and you got to be in for the long haul, and you just got to ride it out. Well, every now and then you lose half of your money, so that's not a really good strategy. So anyway, we had a repeat sell signal not too long ago. So once again, me wanting to save the world, I explained to him, for what it's worth, my system re-triggered a sell signal. He looked at me, and this time I think he's a little bit more concerned because he's been shook up pretty badly in here. And he says, well, what's the worst thing could happen? So my answer was, well, you could lose over half of your money, and it will take 25 years, and I think I also said, or longer, to get it back. And he looked at me in silence and began to turn a little pale. Now, market timing doesn't have to be that complex or any other. When I say market, it'd be stocks, crypto, anything, right? And one of my favorite moving averages is the 30 EMA. And this is the Landry Light indicator down here. You can get it through this plugin. All you have to do is like this video and you'll get this plugin for free. Maybe one day I'll charge, but for now it's free. So this indicator down here, or illustrator as I like to call it, just counts the number of days that the lows are greater than the moving average. If the low intersects the moving average, or the high intersects the moving average, however you want to look at it, it resets to 0. And for the downside, the highs are less than the moving average. And that's downside Landry Light. As a general statement, when it's green, it's good. And Tarzan speak, as I've done before, green, good, red, bad. And you can see how, as long as it's green, the market is doing okay as a general statement. And as long as it's red, the market is not doing very well. By the way, this just counts the number of days and not the magnitude of the move. The magnitude would be something completely different, and that's not something that I necessarily want to get into. I'd prefer to just let me know how long we have been below that moving average, or how long the lows have been above the moving average for upside. So if you take a longer term view, still using the 30 EMA, you can see we had a nice trend back in 2000, was mostly green, and then we had the slide, obviously coming into the pandemic, which was bad, mostly red, and then coming out of it, we were mostly green. There were a few little questionable times in between, but for the most part, it stayed mostly green, again with the 30 EMA during that time period. Now, in more recent times, early this year, it turned red. The market sold off. We had a little bit of green where things were beginning to improve, but as I showed you a few minutes ago, my big concern there was that we would rally just enough to trap everyone. The market would do what it had to do to frustrate the most amount of people, and would also do what it have to do to fool the most amount of people and do the obvious in the most unobvious manner. And that's what I think happened. So we did have one little good spot for a little while in there, but unfortunately that ended, and we went back to downside Landry Light on the 30 EMA. If you wanted to take a little bit longer term approach and use the 200-day simple and the 50-day simple moving averages, those are commonly used averages when it comes to the stock market. Your signals would be a little bit fewer and farther between. They'd be a little bit more lag, but they'd still be fairly useful, as you could see here. I like to look at both, actually. But you can see with a 200-day moving average, we were green for a long time. And then we began to sell off in 2019 when the market became a little questionable. The market was back up for a long time. Everything's back to being okay. And then, of course, the pandemic slide in here. We're going to have downside Landry Light, okay? And then when that was over, we turned back green. And then, of course, in more recent times, the market has begun to roll over again, and we're getting more and more red in here with a tiny bit of green, but mostly red. Now, if you take a look at the 50-day, it's going to have a few more signals, but for the most part, as long as you stay long while it's green and short or out of the market when it's red, or become cautious at least when it turns red, you're going to do pretty good as far as staying on the right side of the market. Now, I want to shift gears, and this goes all the way back to the basics, like I talked about in the beginning of this presentation. And the reason is that we have these new brainiacs that they're seen as they could do no harm. And then we've got some of these old guys, these old geniuses that are still around. And from my standpoint, it seems like they've done some really stupid things. And I would suggest that learn from their mistakes and don't do that. And a little technical analysis would actually solve these problems, especially combined with a little money management. And I want to just point these things out. Now, when I talk about technical analysis, forget about all the mumbo-jumbo stuff, and I don't want to throw anybody under the bus, although I will say, and I actually could quote somebody else that said something very similar, but there's certain methods out there, and this is somebody who I have utmost respect for, and he said he's never, in his entire career, and he's retired now, but he's never met a wealthy person who uses one of these arcane methods. And I'm sure you could pretty much put any arcane method in there. So when I'm talking about technical analysis, I'm talking about simple things such as supply and demand, drawing big blue arrows, and at the utmost complexity, maybe using Landry Light or something like that. Now, if you think about technical analysis in its purest form, it is performance-based investing. So what does that mean? Well, if we go back to the ARLP example I used a couple of weeks ago, we had a big picture, cup and handle type of pattern, and the market rallied from the low. And I'm actually trading the pullback pattern, but I did happen to notice it was also a big picture bottoming formation. We had an entry here, a stop down here, an initial profit target here. Now, the reason I'm showing this again is not so much the setup in and of itself, but if you measured the rally from that low, believe it or not, that was a 106% rally. And then it pulls back to complete the setup. Now, this is what's happened since, and we took partial profits along the way. And knock on wood, we're still long, but it's up 285% since we got in. So yes, there's been some corrections in between, and we have a stop, and fortunately we were able to survive those corrections. But the point is, as long as the stock does well, we will continue to stick with it. It amazes me, people in life, you could explain to them like, okay, here's the deal. You've got 3 employees, and 2 of these employees are busting their butt, and this third guy is just sitting on his butt. And before I can complete that analogy, usually they'll jump in and say, I'd fire his butt. Well, I'm not sure why people want to catch the falling knife with stock. The fiber guy knocks on the door. They just put fiber in the neighborhood. He's like, hey, you want some fiber? He comes in my office to check things out. And he's like, what are all those red bars? This was yesterday. The market was headed lower. And I said, oh, that's the market. It's headed lower. He goes, well, is now a good time to buy? It's like, no. No, it's going down. You want to buy things when they're going up. If you were running a company, you would fire the employees that weren't doing well, and you would keep the ones that are doing well. But in markets, for some reason, and I guess it's probably the fault of all the aforementioned Kool-Aid drinkers, people want to try to buy low and sell high. And believe me, that is a loser's game. I tried to explain to him not to try to catch the falling knife. Now, let me just show you why money, and at the last minute I threw the word ego management, is so important. Because obviously some of these mistakes made by people who should know better, or a mistake not only of money management, but also of the ego. And they have also completely thrown technical analysis, at least the simple trend analysis, out of the window. So here's the ARK Innovation Fund. This was pointed out by someone in my Facebook group. They pointed out that this fund has lost about 80% of its value. And just for S&Gs, I thought it'd be kind of fun. I know you want to party with me, but I thought it'd be fun to throw the TFM 10% system in this. Now, I don't know if you should rush out and try to trade this ETF with this system. I haven't done that research, but I thought it'd be kind of cool to see when the sell signal occurred. And the sell signal occurred right here, as you can see. And this stock, or this ETF, lost about, well, actually over 50% of its value from that point. So a lot of that 80% loss, or whatever it was total, could have been avoided by just some very simple technical analysis, some performance-based investing. Hey, things are not looking so hot. Maybe we need to get out of the way. In 2017, I was kind of blown away by what Mr. Ackman did. And by the way, I'm not saying these things to be Schadenfreude. Believe me, I get my butt handed to me quite a bit. I had a bad day yesterday. I'm not having a great day today. I'm kind of in a crappy mood. You know? And anyway, I think we can learn from their mistakes, as I said earlier. And this was a YouTube I did back in 2017. And the point I wanted to make was Mr. Ackman actually started buying this stock, VRX, right around here. And this was about a 70 or 80% run higher, which is very, very, very impressive. So he did a really good job, at least initially. And if he would have taken some profits off the table, or at the least just trailed the stop higher and got stopped out, he actually would have made some money instead of losing $4.1 billion on this stock. And you can see he sold out at fairly low levels once he was down about 90%. Now, fast forward 5 years, and again, I'm not laughing at him. I'm just laughing at how absurd the situation is. He loses $430 million betting on Netflix. Well, you could draw an arrow and see which way that Netflix is headed. And you could say, well, Dave, that's in hindsight. Well, go back 3 months, and it was headed down 3 months ago. So he obviously tried to catch that falling knife, which is a bad thing. If you're putting together a group of employees for your company, you want to pick the best employees. You don't want to pick people who are lazy because maybe they'll get tired of being lazy and start working, right? Well, the same thing goes for your portfolio. And I know a lot of what I'm talking about here is rudimentary, but you'd be surprised at how many people fight trends and hang on forever. Now, what are some simple things you can do? Well, first of all, buy strength, not weakness. You want to sell on weakness. Take partial profits along the way because you never know if you're going to have those great trends develop. You want to stick positions as long as they move in your favor via a trailing stop. We've done complete shows on money management, so go in and watch those. Learn to accept what is. Often the market is not doing what you want it to do, but what is. As I often say, money management will cure a multitude of sins. It certainly would have saved Mr. Ackman about $5 billion and actually could have actually made him a little money. Now, just real quick, the TFM system, we did have that brief buy. I talked about this last week, so I won't go into it in details. But the market had already turned around by the time the signal actually occurred. So in a case like this where you really have to squint your eyes, and I didn't even realize it was a buy until somebody in my Facebook group pointed it out. But yes, that technically was a buy, but we did have a sell signal shortly thereafter. As long as we stay below the buy line and below the 50-week moving average, we will still be under that sell signal. In other words, we can't have a buy until both those things occur. Now, recently I talked about my next 100 trades, And I don't have anything to show you this week because right now I'm just being patient. In fact, I was thinking about doing a show just on patience. I'm sure I have a half a dozen shows out there on that. Right now, you just want to sit and wait for setups, wait for conditions to improve. On a big bounce, we might start seeing some shorts setting up. Well, that's my time for this week. Again, I just wanted to go back to the basics because times like these, people begin to fight the trend. As long as the trend goes up, everyone just thinks everything's going to be fine forever. It's when it stops going up is when people get into a lot of trouble. Again, if you need the slides and a lot more information, including all 3 of my books in PDF format, davelandry.com/StockCharts. If you need to reach me, again, davelandry.com/contact. I want to thank you guys and girls for watching, and may the trend be with you.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.